Hello, and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Markets surged this past week as cooling inflation and robust earnings propelled equities higher. U.S. equity markets posted their second positive week out of the past 6, while bond yields retreated on signs of moderating inflation. Globally, European and Chinese stocks rallied strongly, with robust gains across major indexes. In contrast, Japan lagged, weighed down by speculation of tighter monetary policy. Let's delve into the regional highlights. Strong bank earnings and a slowdown in inflation reignited investor optimism, propelling stocks to their best performance in weeks. The S&P 500 climbed 2.91%. and the Nasdaq Composite gained 2.45%. Mid-cap stocks outperformed, with the S&P Mid-Cap 400 surging 3.81%. The Russell 2000 added 2.05%. Inflation data showed progress, with core CPI rising just 0.2% in December, its smallest increase since July. Year-over-year core inflation slowed to 3.2% from 3.3%, sparking optimism for potential rate cuts later in the year. Retail sales grew by 0.4% in December, below expectations of 0.6%, while jobless claims rose modestly to 217,000, signaling some labor market cooling. Major banks exceeded expectations, with profits at JP Morgan, Goldman Sachs, and Wells Fargo more than doubling year-over-year. Analysts now anticipate the financial sector will post nearly 40% Q4 earnings growth, the strongest among all sectors. European markets rallied on softer inflation data, which bolstered expectations of further rate cuts from the European Central Bank, ECB. The Stoxx Ex Europe 600 advanced 2.37%. France's CAC 40 led the charge, gaining 3.75%, followed by Germany's DAX, up 3.41%. Italy's FTSE MIB climbed 3.36%, while the UK's FTSE 100 rose 3.11%. UK inflation slowed unexpectedly to 2.5% in December, bolstering hopes for a February rate cut from the Bank of England. Germany's economy contracted for the second consecutive year, minus 0.2% in 2024, dragged down by weak consumer spending and challenges in the automotive sector. The ECB emphasized caution in its approach to further rate cuts, citing risks related to geopolitics and fiscal policy uncertainties. Concerns about potential monetary tightening weighed on Japan's equity markets, while the yen strengthened against the US dollar. The Nikkei 225 dropped 1.89%, while the broader Topix index declined 1.30%. The yen appreciated to 155.36 per USD from 158.05 the prior week, putting pressure on export-heavy sectors. Meanwhile, the 10-year Japanese government bond yield climbed to 1.20%, nearing a 14-year high. Bank of Japan. Governor Kazuo Ueda reaffirmed the BOJ's readiness to raise rates if inflation and wage growth align with forecasts. However, weak real wage growth at minus 0.3% year-over-year in November and global economic uncertainties may delay any rate hike until later in 2025. Robust GDP growth and improving industrial production boosted Chinese equities, signaling a recovery despite lingering property market pressures. The Shanghai Composite Index rose 2.31%, while Hong Kong's Hang Seng Index gained 2.73%. China's economy expanded 5.4% year-over-year in Q4, exceeding expectations and improving from Q3's 4.6% growth. Full-year GDP growth hit the government's 5% target. Industrial output rose 6.2% year-over-year in December, while retail sales increased by 3.7%, driven by strong consumer spending on autos and renewable energy. New home prices stabilized in December, signaling improvement after months of declines, supported by government fiscal and monetary stimulus. Markets will be closed in observance of Martin Luther King Jr. Day, coinciding with the inauguration of President Donald Trump. The fourth quarter earnings season continues, with major companies such as Netflix, Johnson & Johnson, Procter & Gamble, and American Express scheduled to report. Release of S&P Global's Manufacturing and Services Purchasing Managers Indexes, PMIs, for January, providing insights into business activity. The UK will release unemployment data, including the claimant count change and average earnings index, offering a view of the labor market's health. Germany's IFO Business Climate Index will be published, reflecting the business sentiment in Europe's largest economy. The Eurozone will see the release of flash manufacturing and services PMIs for January, indicating the region's economic activity levels. The Bank of Japan, BOJ, will announce its interest rate decision. Speculation suggests a potential rate hike to 0.5%, which would be the first increase since July, aiming to strengthen the yen amid global economic shifts. China is expected to release its leading economic index for December 2024, providing insights into the country's economic trajectory. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.